Okay, good morning, you guys. So in this video right here, I'll be giving a trade breakdown and basically a technical analysis in some sort of this trade I took on December 23rd, which I ended up getting stopped out for $1,400 on the day. But in my opinion, that's a W. So I hope you guys enjoy this trade breakdown and yeah, enjoy. So coming to the day at New York AM market open, we ended up rallying 120 to 150 points, and I didn't end up catching this long due to my strategy not being there, and also I have a rule where I won't trade until 5 to 10 minutes after market open. That's because when you're trading during market open, there's no ideal structure that you're trading off of. And 70% of people who trade market open are gambling because there's not enough market structure to go off of. So I would not advise you to trade off of market open, even if your strategy shows up. But it's totally up to you if you want to take it. But that's why I didn't end up taking it. So another reason why you don't want to trade off of market open is because you want to wait for price to develop and show you what significant draws on liquidity we take out and what we're doing on the higher time frames. So on the higher time frames, it is showing us that we're overall bullish. We're on the 1 minute right now, but I'm sure that if you go on the 1 hour, 4 hour, we have a huge bullish candle, and it'll tell people that we're currently trending to the upside. But the good thing about letting price develop is you can see what significant draws on liquidity we take out. So right off of market open, we ended up taking out Asia highs, London highs, and we also took out previous day New York PM highs. So as soon as we did that, you can see we started displacing towards the downside. And every time I'm trading, you always want to keep into account, yeah, we were like showing this on the higher time frames, but also you want to take a trade to the higher draws on liquidity. So at this point, I'm like, hey, I'm taking into account, do we have higher draws on liquidity to the buy side or to the sell side? And to me, I'm like, okay, to the sell side because we have Asia London lows that are resting, and to the upside, we already swept our significant levels of liquidity. So that is why you should wait for price to develop so you can see what significant draws we have left afterwards. So we ended up waiting patiently for 30 minutes, and at exactly 10 o'clock, we seen our setup, and it was beautiful, it was perfect, it was crisp. So now I'm going to give a breakdown of my setup, my personal setup, and how I take trades off of it. So our first step, one, is our trigger, which equals out to our order block. So as you can see here, we have a 15-minute order block sitting above price. We ended up tapping back into it, and we had that nice V-shaped turnaround, which we call a nice V-shaped recovery. It's just something you always want to keep note in your head, indicating that this order block is true and that it's strong. So that's our first step, is the order block, which is our trigger. Our second step would be our confirmation, and that is in the form of a inversion. So when we're taking inversions, I always want you guys to remember that you want to take the highest inversion that we can get. So right here, we had a 1 minute inversion, and that's due to the 15-minute and the 5 minute and the 3 minute and the 2 minute. They all did not have a fair value gap that I could work off of and that we could inverse. But on the 1 minute, that's the only time frame that we had. So my confirmation was off this 1 minute inversion, and you always want to take the highest time frame fair value gap that you have, and that's presented to you. So after going over our first and second step, that is our entry, and now you basically want to set a stop loss. So where are we setting our stop loss? Where are we setting our take profit? So I'm setting my take profit at Asia and London lows, and then I'm setting my stop loss 75% into this order block because I know that it's going to be protected. It's a protected zone, so I always want you guys to remember that. And then also we're going to go into where our break-even point should be. So when we're going break-even, when you're in a trade, you should look for the closest low or high that is presented to you in your entry, which was this low to me right here. I also want you guys to take into account in your break-even points. So you always want to make sure your break-even points aren't too close to your original opening position because it would just be a bad play. It's not very that optimal. So after going over all those steps that we just listed, I want you guys to remember these are all steps you need to take when you're coming to the market and looking to take a great trade. And I'll go over these steps right now. Your first step, identifying where price is moving and where it's coming from. The second step should be identifying your significant draws on liquidity. Your third should be finding your setup. Your fourth is your take profit and your stop loss placement. And five is your break even point. And if you can identify all of those, then that will make up of a great trade. Now I'm going to try and replicate my thought process that I had on this day when I was trading. And so far in this trade, we hit our break even point, and just like that, you move your stop loss to your original opening position, and that is what break even is. So basically right now this is a risk-free trade, and I'm basically sitting back, just hit this order blocker here. So like hopefully we can close bearish, because if not, I might get fucked right here. But that's okay. Holy bangers, please. Oh my god, bro. 2 more minutes until news. If we close bearish right here, yeah, bro, it's GG's, bro. It's GG's.
Order filled.
Shit, I'm not liking that reaction.
Same, lucky. So as you can see right there, I start trailing because at this point we're far enough away from our original position where I can start confidently saying that, okay, we're trailing right now, but I'm confident that price will return lower towards TP. But if not, we're still getting stopped out, however amount we're trailing for. But remember, when we're trailing in the beginning, we're not far enough away from our position to be deep trailing. So right now we're shallow trailing, and that is a perfect point that you want to be trailing at. So we just went from break even to now if we get stopped out, we're getting stopped out in profit. And that is amazing. What was your entry?
I re-entered like kind of late again because I got stopped out.
Oh, okay. Look at NQ. Order block, order block, order block. Okay. We should be chilling. The furthest I'm targeting is that low, so like, see what happens. Come on, man.
What you up?
Right now I'm up 1200.
My guy. At least.
Oh yeah, I'm taking some profits right now. Yeah, I moved my stop loss to 25,694.
We're gonna flush.
Yeah, low key, bro. Let's fucking go, Chief. Yo, this is a good trade, bro. Oh my
Guaranteed.
god, this is beautiful. TP's
We're
about to
gonna hit TP.
hit. Let's go. Let's go, bro. So as you can see right there, I started trailing harder because at the point in this trade, we are 2/3 into it. I always tell people in my Discord that you want to look at from your original position to your take profit, you always want to look at it into thirds. So we have 1/3, we have 2/3 right there. So we're 2/3 into this trade, and then we just have that one more of that third that we need to complete. So you should be trailing a little bit harder at that point. Because in every trade that you're in, the closer we are to hitting TP, the less likely we are to hit it. So the more or the longer you are in a trade, the slimmer and slimmer the chances are of hitting full TP. So at this point, we're already trailing for $1,000 or we're hitting full TP. And at this point, you can just sit back. I mean, it's either you get the profit, you get stopped down profit, or you hit full TP. And I'm just gonna let the rest of the video play out, and you'll see what ends up happening. Oh my God, we're getting that
I want to
rejection.
watch it, bro. Your trade is going crazy.
I know, dude. Come on, full TP. Let's go. This is like if we hit full TP, this will be easily my best trade.
Bro, yeah, you're a beast, dude.
Thank you, Brody. Thank you.
Good trade hold on that drawdown too.
Yes,
As soon
sir.
as you enter, good
Mhm.
trust.
No, yeah, low key, I was like, I don't know if I wanted to like get in there, cause at 1 minute it was like it looked like it was already like mitigated, so I was like, fuck, I don't know, this is
Bro, it
good,
feels so good to be up, yeah. Like
bro. It feels
like
great,
in a good
bro.
position. Hold on
Oh,
for.
we're gonna flush right here. We should see this flush.
See where it's so just retraced.
Come on, flush towards these lows, man. Oh, okay. Sellers want to get down there, man.
Good trade, bro.
Thank you, thank you. We're about to get, we're about to take profits right now. I think I wanted to hit
No,
full
we're not.
TP.
Not getting take profit. We're getting TP.
Think so? You think so?
Stop loss. We're getting TP. Yeah, bro, you got it.
For all we need is a bearish close. Oh my God.
It makes sense to close right at the bottom here,
Mm.
right where your take profit is.
Mhm.
And then reverse position and hit the long.
Yeah.
People be
Oh
doing that, bro.
shit. Oh shit. Oh shit. Oh shit. Oh, yeah, I think we're done.
Order filled.
Yeah. Okay. So as you guys can see, we ended up getting stopped on profit, $1,300. But in total on that day, I made $1,400 because before this trade, I ended up getting stopped in profit by $10. But overall, in this whole video, I hope you guys took into account what it takes to place good trades. So you should have all your steps written down that I have pointed out in this whole video, and just how you should be breaking down until you enter a trade, until the very end. So your first step is identifying where price is moving and where it's moving from. Your second step should be finding your significant draws on liquidity. Your third is finding your setup. Your fourth is your take profit and stop loss placement. And 5 should be your break even point. When you identify all of these 5 steps, that is what makes a perfect trade. So other than that, I hope you guys enjoyed this video. If you guys have any comments or questions, type them down in the comments and I'll try and answer them. But yeah, besides that, that's a trade recap, and I am up on my Express account right now. So yay. But we'll see what happens next week. It's going to be the first week of January, and I advise you guys to be careful because this is the accumulation phase of the year. So yeah, just make sure you take A plus setups, and I'll try and push out as much videos as I can. And I hope you guys can watch this progress as I take my 5K payout on my Express account. Thank you guys for watching. Peace.